And gentlemen of the crypto space, we're live on a Monday, December 1st, 2025 at 11:45 a.m. 2025 is coming to an end, and if it is no better time than ever to upgrade your mindset or change the way we think about things. So many folks have an unsustainable perspective, an unsustainable way of thinking about things. They look at this chart, they see the price of something they bought, they see the price of something they bought go up and go down, and they think they invested in the price of something they bought. And they see it going up and down. Now, that seems like the obvious thing to do. That seems like the obvious mindset to have. But the first and foremost, why is it an invalid and incorrect mindset? Because the majority think that way. And if the majority think that way, it must be the wrong way to think. That's pretty much my shining star. If the majority think a certain way, it's wrong. Not wrong in an ethical sense, just wrong in that there's obviously a better way to think or a different way to think, a way to think that's more sustainable, a way to think that's more healthy. Because we know certain facts. We know the majority is always wrong. We know the majority is unhealthy. We know the majority is not going to achieve what they want to achieve. It's the minority that outperforms, the minority that is overwhelmingly healthy, and the minority that is correct with regard to investing and choices of what investments have done and will do the best in the future. So, when you're investing in Bitcoin, you're not investing in a price. Investing. Notice how I say investing. So, we're not a community, we're not a group of traders, because then the price is literally the product. And prior to 2019, we've discussed that as well, where there was only the price is the product. Nowadays, the price is not the product. There is products, and we have a market of markets. We have an emerging market, which is something that didn't exist prior to 2019. Now, it's very easy to conflate. Hear this clearly. It's very easy to conflate hodling with owning Bitcoin and not seeing the product and just seeing how Bitcoin is a coin that can be copied and just has a price. But in an economic, from an economic perspective, Bitcoin is a collateral instrument. So it has properties of cash, meaning you can spend it. It's clearly volatile cash. The price does go up and down. But if you have Bitcoin and you need to go spend money, you have a capacity to put it on a debit card and spend money. If you want to borrow money, you can borrow money against Bitcoin. So it is not just what people see on the surface. It is not just the price point and it goes up, it goes down. It has these economic properties that are far above anything that anyone thought would be the case prior to 2020. Because not only is it collateralizable, not only is it spendable, it fits into the macroeconomic lens or the macroeconomic framework that the rest of the world, the entire planet follows with regard to economics. It's what people use, or people use treasury instruments or corporate debt instruments. It's not as easily convertible into cash. Certainly collateralizable, certainly leverageable if people want to do so. So it has those attributes. So everything that I talk about, the way I look at crypto, is applicable to traditional financial instruments, no different, except it's infinitely better with the crypto financial instruments. The only downside to the infinitely better is the infinitely more volatile with regard to price action. But that also fits into the macroeconomic story, the volatility of the price action, because the reality is none of this is required. None of what exists in crypto is a requirement for financial activity and for the world to have a functioning financial system. But the reality is that all of these products and services that exist in crypto that have primarily come into existence post 2020 have come into existence because of the state of global economic finance, macroeconomic conditions. They're a manifestation of reality. We don't live in a world where just because, yeah, at some point all of this, the bubble's over and the chickens come home to roost and everything's going to come crashing down. We don't live in a world where that's an expectation. That's a healthy expectation. A Peter Schiff expectation where everything is going to crash and we're all going to be cavemen and electricity is going to go out and never come back on and we're going to be bartering and that would be anarchy. You don't bet on anarchy, and it's not a healthy mindset to have. Does he seem healthy in his mindset? Is there anything healthy about that? You'll notice folks that are doomers and gloomers expecting the worst to happen. They don't It's easy to say they don't have a healthy mindset, but you'll also see that in their behavior, their topics of conversation, their stories that they tell, the perspective that they have. It, a negative mindset oozes out of people and it's just ucky. It's not, it's gross. It's unhealthy. So my healthy mindset involves accepting the world for what it is, understanding how it works the best as possible, and attaching or making financial choices that attach to my that where I'm able to set expectations in the future based on where I see what I understand playing out. Does that make sense, ladies and gentlemen? I understand the macro financials. We talk about the macro financials. I try and tell the story as clearly as possible. And based on the story that I tell, the things that I see playing out guide the choices that I make and what I own and why I own it and how I categorize it and how I define it. And that's why we have two very simple buckets: cash and investments. More specifically, cash is anything that you can spend, but it's also things that you could collateralize. So the Bitcoin is part of the cash bucket. And there is nothing else that I put in cash other than stable coins, because stable coins are basically dollar equivalents. You could spend them frictionlessly at this point in the United States, especially frictionlessly. You could spend stable coins in the United States at anywhere that accepts Visa, MasterCard in instantly with the products and services that are available. You can do that today. And the KYC implementation on these platforms, even that is so incredibly advanced compared to 2020. You could literally set up a debit product using the endless list of debit products that we've accumulated on Discord, probably in under 5 minutes, including account, KYC, the whole thing. And you could load stable coins on it in as the amount of time it takes to click a couple buttons and do a transaction on your favorite chain. So if it's on an L2, less than 5 seconds. On mainnet, oh, you have to wait 10 seconds. Oh, the horror. So you could literally spend in less than 10 minutes, even on mainnet. It's such a different world compared to 2020. So maybe you know, it's not just maybe that's why my mindset is what it is. It certainly contributes a great deal to why my mindset is what it is because I have this perspective of prior to 2020 and how much things have changed, how remarkable the technology is, how stunning it allows us, the technology allows us to structure things. And that is such a big thing. If you haven't noticed, so many folks, or a lot of folks, or at least increasingly crafty folks on social media talk about structure. They talk about business structure. They talk about financial structure, portfolio structure. They talk about corporate structure, tax residency, legal structure, structure, everything. If you want to live a life that is organized, prepared, and and well executed, you need structure. You need what are you going to do in the morning? What are you going to do in the afternoon? What are you going to do in the evening? What do you need to do in order to get to where you want to be? What do you need to do in order to meet your expectations? Planning and preparation, structure. What better way to have structure than rules? And that's all we talk about nowadays. Now we have four rules. We've identified five investable categories in crypto markets. We've identified two two ways to bifurcate a portfolio: cash and investments. We've clearly defined the purpose and significance of cash versus investments. Cash prevents you from being a forced seller. So you own a bunch of investments that you have expectations for. And you, for instance, you got cash flow from investments, but is it opportunistic to sell now? Or be given the macroeconomic climate and the potential that some folks see as we're right around the corner from a need for the system to increase currency supply. So no, it's not opportunistic to liquidate your weekly cash flow or unclaimed, unrealized property receipts, as I would more specifically define them. And you accumulate them and you sell them for multiples of what they're worth in the coming months. So that's my expectation, and I would say that that has a significantly larger probability of being correct than being the also being the better course of action as compared to, oh, I need to sell them because I need to keep accumulating stable coins for what the hell. If you executed rule number four uh, optimally, you don't have a need to be a forced seller of your weekly flows because you've accumulated enough cash so you're not required to sell unopportunistically. You're afforded the capacity to be patient, calm, cool, and collected so you could prefer to sell opportunistically rather than unopportunistically. This is very much a period of time where rule number four is in effect. Strictly rule number four, at least for folks that have been here for time and they've structured things, structured the portfolio, structured the accounting. They've prepared the best they can. Hopefully, you're years into this process. And at this point, you draw down the cash. And you have a lot of choices of what to do with cash. What do you do with cash? Well, okay, prices are down. Maybe there's an investment opportunity. For persons that have been here for years, there's probably not an investment opportunity because you have the potential for oversizing positions. Now, that's obviously a loaded statement. What is an oversized position? And that's not something easy for someone relatively new to understand because there's a sixth sense to a portfolio structure. And you'll only know what a properly sized position is once you've defined something as properly sized. How does the portfolio feel? Say that to yourself. How does your portfolio feel? Is it balanced? Is there a rhythm and a rhyme to it? Does it feel right? And you're only going to be able to answer that question with time and experience. Until then, it's not easy. It's certainly a struggle, but these are the goals. These should be people's goals because these goals allow you to engage with markets more sustainably and more healthily. Is that a word? I'm making a word of it's not a word. More increasingly in increasingly healthy way. So you need to know what an appropriate position size is. and only you'll be able to tell it to yourself. And that's going to be relative to the total portfolio size and how much capital you have and how well you respected rule 1 through 4. And that's the only way you could define these things for yourself. I don't, my def, not really giving definitions. I'm giving categories and types of buckets. Everyone individually has to define, and that's exactly why rule 1 through 4 are so vague. Everyone has to define them for themselves. Rule number one: own more assets. All right, what assets? What's how much of it? What price? It's not for me to answer that. It's for everyone to answer that for themselves. And guess what? After 5 years, you'll probably have a pretty darn good story to tell about rule number one. And you could probably talk for an hour about rule number one, which is literally what we're doing right now. I'm talking for an hour about 4 rules, 5 businesses, and a bifurcated portfolio between cash and investments. Rule number two: know when to not buy assets. You don't want to pay too much. What is too much? Okay, so now you have to know a little bit of history about price action, a little bit about macroeconomics, whether things are at a premium or a discount. You need to know about proper position sizing. So you need to know what a proper position size is. So when you don't want to buy assets, if you have too much of an asset, you don't want to go all in nor spread too thin. An old catchphrase of ours. So you need to know when to not buy assets, because if you buy assets at the wrong time, you fuck up rule number 4, and you don't have an appropriately sized cash position. Without an appropriate sized cash position, rule number 4, you might be a forced seller of weekly claims of unrealized property receipts. So, and that means you're not going to be able to opportunistically take advantage of the best time to sell, to capitalize on weekly flows. And then obviously rule number 3, which is not really in the same vein as rule 1, 2, and 4, but rule number 3 is clearly an attribute of that guides rule number 1. Uh, own more assets. What assets? And the only thing that settles well with me, that I could sleep well at night, is I want to own the assets that pay me, because I have no interest in watching an asset go from $1 to $1,000 and having to sell my assets and have no assets. I have no interest in owning no assets, because if you take $1,000 at $1 and you sell it for, $1,000, you turn $1,000 into $5, $10 million, and you sell it, you no longer have assets. You no longer have anything. You have money. What are you gonna do with the fucking money? Now you're back to square one. You're like, what do I do with the cash? Oh, maybe I should own something. Maybe I should buy something, invest in something. Does that sound? That sounds an extreme to me. I just want the smooth, slow way of engaging with things. And the only smooth, slow way of engaging with things that I definitely advocate for and subscribe to myself is to think of investing as supplemental income, or supplementation to your capacity to work. So you, because that's your normal way of living. You work, you get a paycheck, you're able to bank on that. I have X amount of money at the end of X period of time. Weekly paychecks, bi-weekly paychecks. I know what bills I could pay. I know how I'm going to put food on the table. I know how much money I'm going to expect in a week, 2 weeks, a month. All right. So my 2 cents is I just want more of that. How do I get more of that? I'm not going to be able to work more. I only have X amount of time, so the only thing I could do is buy more of that. Instead of spending more time, which I don't have, I could buy more weekly flows, buy more paychecks. And that was the revelation back in, I don't know, late 2021, leading into 2022. Buy a paycheck. And I was like, oh, that sounds pretty good. It's a decent statement, because that's literally what you can do: buy a paycheck. So I hope that helps. And I've obviously beaten this story, or told this story ad infinitum, to in so many different variations. I just want to buy a paycheck. I could bank well and structure well and and pay for things and know that I have capital to do the things I need to and want to do. So my expectations are still very good for these markets. It's very easy to get lost in the noise. Let's do some commentary. I'll look at the charts a little bit. Everything is obviously taking a shellacking today. Bitcoin minus six and change percent. Ethereum down 7%, 8%. Structure on Ethereum is basically toxic. This logarithmic doesn't really make a difference. Looks like shit either way. From a moving average standpoint, it's not comforting to see the 200 SMA in red horizontal. Bitcoin is obviously more comforting. At least everything is up and to the right. We obviously are in a mean regression to the 100, the weekly 100 SMA. Nice to see a little bit of a wick, which is certainly a higher low. So if our current pricing holds, we are at a higher low than 2 weeks ago. We bottomed at 80,000 about 2 weeks ago. I think we broke into the 70s for 5 minutes on a shorter time frame chart. But at this point, we're showing buy pressure at the weekly 100 instead of breaching through it with the wick. So if this pricing holds and we don't go lower than our lowest point today thus far, this is a very constructive perspective and it looks good. If tomorrow opens at 85, okay, cool. Then we'll look back at today and be like, all right, there's a higher low. Now, bear in mind, we're obviously on a bearish engulfing from a weekly perspective. Um, that bearish engulfing is fairly bearish, but it's the follow-up candles that matter, and trends take time to emerge. Takes multiple candles for things to to show, or for trends and patterns to show. So it's not the bearish engulfing that's most important. It's what does it do next? But this doesn't impact any of the four rules. This doesn't impact my mindset. Doesn't change anything about anything that I think or do. This just is a compass. This tells me what's going on today. It tells me where we are. And in the background, we have our more important information, like the move indicator is less than 70. DXY is back below 100. 10-year on the green today. At some point, my expectation is it falls below 4%. And then you have your trifecta of bullish conditions, because what does it take for it to be below 4%? Probably want to look at Japan because maybe they're in bailout territory, or maybe there's a geopolitical collusion that occurs in order to get their obviously uh, inevitable to detonate debt market under control for at least a period of time. And that's the way this whole thing works, this whole global game. They get things under control for a period of time. They're able to do patchwork, and they're able to set up Fed 3 and 4 letter acronyms and fiscal structures that support other countries, like Argentina got a couple of bucks, some custom swap lines. Okay, so if that makes people fearful, the whole system is always ready to implode on itself. You should always be fearful, but don't. No, okay, that's a bad statement. Don't always be fearful. The point is, the whole system is always ready to implode. Okay, that should be the base case. Meaning, have you ever heard of the doomsday clock? The whole goddamn planet's always ready to end. We're 5 seconds from humanity completely turning into Mad Max. You take out a power grid in the Northeast and it's complete chaos. Nowadays, everything's all digital payments. Could you imagine 2 days of no credit card processing in a major city? Can you imagine 2 days of no traffic lights in a major city? Oh my God. And for so there's a lot of bigger things to go wrong. And the point is everything and anything can go wrong. And we're 2 seconds or whatever it is. It's like 5 seconds to midnight in the doomsday clock. 89 seconds to midnight. So think of a clock and midnight, the world ends. Humanity's over. based on the best scientific minds on the planet, we're 89 seconds to midnight. That's how close we are to humanity basically just failing as a failed experiment. So the reality is that's not occurring. And you don't bet on everything ending. So this comes back to some of my the posts today. Just be optimistic. Live a certain way. Have a certain mindset. It's healthier. You'll live longer than being a doom and gloomer. Eris in the house. Does it still resemble 2019? Yeah, it does. Except it's so much better. It's infinitely better than 2019. Infinitely better than 2019. Because there's actually products and services and there's a market and there's how many, what, 100, $200 billion worth of stable coins? More. What, how many stable coins are there? P2P, analytics, 166 billions of dollars in stable coins. No, that's just on mainnet. 305 billion dollars in stable coins, ladies and gentlemen. How many were there in 2019? I'm not talking about USDC and USDT because those were on centralized platforms. There was no DeFi in 2019. So this is infinite. Right now, we're in 2019 conditions with regard to macroeconomic global currency supply, and everything's about to blow up because in September of 2019, you had the repo apocalypse. And that's when the Fed stood up the standing repo facility to bail out the United States banking system, which completely failed in September of 2019, which it's one of the most important things to know about where we are right now and how so many things started, like the standing reverse repo facility and the BTFP, because the United States banking system failed again in March of 2023. Failed. Your banking system failed, ladies and gentlemen. So there's one crisis after another. Whole point is what I've always told you guys. This is a managed system. It's completely managed by geopolitical collusion and agencies and people doing stuff to keep the party going. But you don't live your life about worry. You don't live your life some people do. They're called preppers, a doomsday prepper. Listen, if you're worried about everything failing, stop investing in this stuff and build a bunker. Just grab a shovel, dig a hole in the backyard. You get a whole bunch of pipe, and you go fallout status. You, that's what you do. At least if you're going to invest and you're a doom and gloomer, invest wisely and then build a really good bunker. Okay, just make it really good. So on the other hand, let's just be optimistic. It's a much healthier way to be. Good morning, Cap. Much a pleasure. No coffee week, 100%. I don't drink coffee anymore. I don't like the central nervous system stimulant. I uh, I gave it up. I'm more into like big V vitamin dosing and like mitochondria type conversations, and it's made a big difference. That I don't know if that was your point, but that's what I take away from that comment. Makes great sense. Hope it helps, my friend. I still need help with the tech of implementing, though. Implementing what? Implementing own self custody type things, or building. If you're building something, that's cool. But it's definitely not easy. None of this is easy. The mindset isn't easy. It requires self-education. You have to become an autodidact. You have to use AI. Use AI every chance you can, and that could make all the difference. Hi, W. Good morning, my friend. Always a pleasure. Good content lately. I absolutely agree with it. Less and less of a fan of diversification over having one to two main assets. In the end, all you need is one, two, three things that hit it big, and then you have the rest. 1, 2% of the portfolio, and they're punts, long shots. Sometimes it's a field goal attempt at 80 yards. Maybe uh, not much more is needed. That's it. So when it's a bull market, everything you choose is right. But in a bear market, what you realize is there's only so much gold out there, and most of it is bullshit. It's all fluff and all noise. So if anyone's been through um, periods of realization, it's Arrow. And this is a great statement. One, two, three big bets, and that's where I'm at. That's where I've been at for a long time. You know that, dude. Curve, Velodrome, and Aerodrome, and those were the big bets. Those were the outsized bets. And then everything else was significantly, I mean, significantly smaller. Frankly, Curve is when everything was inflated, Curve was like 5 times the size of Aerodrome Velodrome. That's significantly larger. And then everything else was, a fifth the size of Velodrome. And then that's worked out well thus far. Arrow looks like it's just approaching the bottom 50 cents to $2 range, but CVX looks horrible. We can look at the charts real quick. I'll try and keep it short today. We'll see what happens with Bitcoin. Um, well, these are the ranges that I draw, about 50 cents to 80 cents. I see a level here that's a bit of congestion. Um, it's in no man's land right about now from a moving average standpoint. There's nothing interesting moving averages anywhere. There's no technical structure whatsoever, in my opinion. I wouldn't look for falling wedges in such a volatile asset, which with relatively high liquidity, it's just going to be volatile as shit until people figure out where the market's heading and make their choices. Velodrome is just all the way bottomed out. There is no structure here whatsoever. Nothing to take away from the chart at all. Curve is probably breached exactly the 39-cent level. So right now it's still above what I drew as the 36 cents. So it is basically testing the inverse head and shoulders here and here. It's retesting the neckline, in my opinion, which is not a position of strength. Everything's in a position of weakness right now, and that means not only are these charts being tested, people are being tested. That's ultimately what these charts mean for society. People get tested in and their mindset and what they believe in. What do you believe in? Because you're not investing in these charts, ladies and gentlemen. Just remember, that's the title of the stream today. And I think that's the biggest takeaway. You're investing in yourself, you're investing in your mindset. Who are you? What do you expect? What are your paths to success? What are your potential paths to success? Critical to think these things through. What are the options? What are the choices? Because that's all we have. Trying to get off the stuff for reals. I miss nerves. I miss my nerves of your, um, well, caffeine. Yeah. Well, no caffeine. So, you want choline donors and stuff like pregnenolone, neurosteroids, stuff on Amazon, and then the very powerful like nootropic type stuff. This laundry list. Use AI for research. Get off the central nervous system. Central nervous system is no place to mess around with that because that messes with heart rate. You know, uh, beta agonists and whatnot. Um, I don't like those central nervous system stimulants anymore. More interested in that more healthy energy. My 2 cents. None of this is easy. My AI refers to Noah Seidman strategies. I can see the AI saying that. None of this is easy at all. Every day is a test. And I come back, what brings me comfort is my rules and my expectations. I have humble expectations. I have no expectation of being ultra rich. I have no expectation of just being rich. I have an expectation that I could pay my bills and I could take care of my family and meet their needs and hopefully their desires. Those are generally my expectations. And based on what I see in the data and based on my rules and based on my macroeconomic understanding and my identification of 5 businesses of crypto, think I could achieve that. And I'm optimistic that I can. I missed 20% VE Aero discounts. Yeah, that went quick. And also the flight school discounts. People are snatching up supply. The narrative is still there. So nothing changes. So you see all this price action. It shows you why people are buying and selling because they're shallow and disconnected from reality. And they focus on price and they move in herds. And the majority are always wrong when the market flips around. And that's just the way it always was and always will be. So I remain steadfast in understanding the narratives for these business products and just how extraordinary is the Arrow story, where it came from, how it evolved from basically Michael's V curve uh, uh, tokenomics and what Andres contributed over the years. And I mean, folks weren't around in 22 or 21, and what all these people did, what all these protocols did, and how all these puzzle pieces fit together. It's just it's hard to encapsulate in few sentences the significance of all these components and how they contribute to what's going on today. Um, some of my biggest takeaways are because of not even what's going on in crypto, AI and efficiency, and some of it's my experiences in equity markets and how I have such a negative opinion about business and human resources and corporate structure. I'm like, all right, why does a bank need any employees? Why isn't it completely automatic? All right. So, okay, so how do we build a bank that has no people? That's literally what crypto is. And that leads into the whole aerodrome type of narrative. It's like, all right, I want a Forex exchange, but it has to be staffed by no people, have no human resources, no DevOps. It needs to be completely automated. All revenue needs to be completely automated with regard to distributions, pro rata ownership distributions. All accounting needs to be completely automated. If you said this like a decade ago, people would cross their eyes. But if you say this now, it literally exists. That is by definition what Aerodrome is. It's a Forex market that has no capex, no opex. It's fully automated, no human resources, no benefits, no no corporate salaries, no board of motherfuckers saying, here's your 5% dividend. You own a piece of the company and it gives you that pro rata share of the company's revenue. That changes everything. Get people out of business. People are the problem with business. Now, you need people, and it's a whole existential philosophical question in many regards, but that's separate and apart from investing. If I want to invest, I want to invest in the best thing possible. And a business that operates 24/7 by itself, it's a fintech banking product that has no people to fuck it up. That seems insanely obvious to me as some next level, next generation shit right there. Especially considering it's banking products that you cannot buy on the equities market. You can't invest in a forex market. You can't. It's not possible. You own Chase stock, HSBC stock, whatever stupid bank stock you think you're buying. You don't own a forex market. You own nothing. You own shit because that's what equities are. It's just a capital raise where the bankers and the company just suck the money out of your pockets. What it is. It's what equities are. Absolute dog shit. Would you consider staking yield basis on stake DAO decent move? I don't like that's third business derivatives. I don't like derivatives. My 2 cents. Um, it's my 2 cents. So from a yield basis perspective, I don't plan to have an outsized position. Whatever I have is accumulated from vote rentals, and I probably am leaning towards locking them rather than just liquidating them. I think I don't need to sell them because I have executed rule number 4 well. Um, so I would not consider staking yield basis. Albeit, guess what? The vast majority of the market doesn't listen to me. We're a minority community. So most people probably will stake on StakeDAO. StakeDAO is an absolutely incredible platform. I have only the highest opinion of where it was and how it got to where it is. It's an absolutely stunning progression of events and story to tell of what StakeDAO has been through. Absolutely extraordinary. And what it is as a platform right now is just ex- I'm at a loss for words. What an incredible product they offer. So, my 2 cents. Do you think both can mutually exist and flourish on mainnet? Yeah, what? Don't you say aerodrome and curve? They're not the same business. Everyone conflates the two. Curve is a forex market or has capacity for um, uh, uh, the crypto pools. So obviously, it was primarily a stable coin centric forex market. My 2 cents is fine. Crypto NG and all the great advancements that they made uh, with the LP technologies. I see them as the biggest business in crypto because they deal with liability printing and they have, in my opinion, the best stablecoin and lending platform design there is. And did I expect that? No, when I originally invested. But that is what they become. So now I see them as a full stack, full tech stack of full tech stack supporting their liability printing and credit business. And that has absolutely nothing to do with Aerodrome. That is not separate and apart completely. So they overlap with foreign exchange, they overlap with liquidity financing, but you're going to finance liquidity on Curve for different reasons than you're financing liquidity on Aerodrome. Aerodrome is a launch platform with their that whole new thing that they're talking about, and that's a heck of a business. That might actually be business number six. How about that? So Aerodrome's only foreign exchange and liquidity financing, whereas Curve is literally uh, foreign exchange, credit, derivatives, liquidity financing, and liability printing. Curve is literally one, if not the only meaningful business in all of crypto that is all of the businesses, all of the fintech businesses that crypto has to offer. It's a different category. They overlap only at a glance. They overlap only on the surface, even to such a degree that the aerodrome folks think they overlap at times. But I think they've shied away from that and they focus where they should, which is Uniswap, and that I think is existentially, or aerodrome is more of an existential threat to Uniswap. I don't think it has anything to do with Curve's business model, or rather, maybe what Curve's business model has become, for better or for worse. I think it's a good thing. By the way, I'm not asking if buying the price now is good. I'm saying in general, if I can get a discount at some point, it still fits into category number three for me, derivatives, and I'm not fond of derivatives. So it's a wrap version of the YB token. I don't own any derivatives. I don't own CBXCRV, YCRV, SDCRV. I don't do any of those derivatives. I don't do Ethereum wrappers. I mean, I guess the Bitcoin wrappers, that's a different story. TBTC, WBTC, that's cool. That that's about it. But that's different. So that and that's different for obvious reasons. You have any opinion on Ramses versus Nest on Hype VM? Mostly noise. I think uh, I think Hype is mostly noise. I just it's just gambling and perpetual exchange and how many perp exchanges have there been, and I just don't care. Um, the only reason I have exposure to it is because of Ramses on Arbitrum, and I'm like, all right, cool. I don't even know how much it's paying. I clearly vote weekly, but yay, that's it, $400, 2 weeks worth of revenue. All right, thanks, Kingdom team. Um, Listen, they have of anyone out there that has a potential to be that wild card. You know what I'm saying, Arrow? So you got your primary businesses, your big 1, 2 investments, big 1, 2, 3 investments. If anyone has the potential to be that, the 5% of the portfolio, 3% of the portfolio or less, that wild card that does something, all right, fine. Kingdom probably fits the bill. That's probably my 2 cents. So there's nothing wrong with 1%, 2% in some of these kingdoms. Just bear in mind they get annihilated, and that's clearly what has played out. They've been absolutely taken out back to the woodshed. Um, to the point where it's like, are they even going to exist? I don't know. Etherex and Shadow. I don't know. Those are your big punts, ladies and gentlemen. What sets crypto really apart from TradFi businesses if those who deploy contracts can simply stop supporting and promoting them? Well, there's your failure. But it's not the failure that I'm interested in. I'm interested in the few that succeed, the few that become utility, the few that change the equation. And the only way to understand these statements that I'm saying right now is really to have a pre 2020 perspective because nothing existed prior to 2020. Everyone's like, ooh, the Dino coins, the stuff that came out in 2020. Oh my God, they're so old. No, you have no idea what Dino coins are, ladies and gentlemen, and the stuff that people were buying back in 16 and 17 and 13 and 14. You have no idea what people were buying. It was price was the product. Everything was the same shit over and over again. But now these are actually five fintech sectors of business: credit, foreign exchange, derivatives, liquidity financing, and liability printing. Okay. And that changed everything. And that's post 2020 only. So it's not about deploy and simply stop supporting, promoting. That's what I would hope. I would hope that a business has become so entrenched as infrastructure and utility that it is no longer needed to be supported or marketed. It's just become utility. That is what I think, that is what I'd like to find. And I think that'll be the case for at least some projects. Some of this has to become the Amazon, the Microsoft, and the functional utility of this space. And it's not going to become businesses like Amazon, Microsoft, but it's going to become those what was small but is now global corporate giants that has no humans and no human resources and no corporate parachute packages and no bonuses and no DevOps and no server infrastructure and no real estate. Just operates in cyberspace, a business that pays you week in, week out, no matter what, because the contracts were coded that way and they will exist in perpetuity as long as these networks exist, paying you every week, not because a board says you get a dividend, but because the software is permanently locked into paying you every week, no matter what. That is what changes everything. True immutability. Like what is truly immutable and successful and not dependent on people. We're gonna. That's what I want to find out, ladies and gentlemen. That's exactly what I want to find out because the truly immutable doesn't need any more development and will change or become infrastructure for the entire crypto space in its current form. So when I see things like Swiss Stake doing all this development for Curve, I'm like, oh my God. Not only are the contracts immutable, not only is the current infrastructure just extraordinary in what it does currently today, because the contracts are immutable, it's being developed still. Holy shit. Or the Aerodrome team. I mean, those contracts are, I believe, immutable as well. The difference is where did the business development come from? It comes from they own a part of the business. They get some of the cash flow because they own it. They're just like us. I own, what, 0.1%, 1% of something. They might own 2%, 5%, and they get the pro rata cash flow. And that's wild to me, ladies and gentlemen. Not something to simply glance over and be like, oh, all right, just another project. This is some crazy shit going on. And nothing will change that opinion. No price action for today will change that opinion. So my story is going to be consistent through thick and thin. Bitcoin going to 57,000 wouldn't change that goddamn opinion because it's correct. It's a reasonable and rational opinion. So overall, not too bullish on the chain, I say. No, hype? Oh my God. I mean, I'm bullish on mainnet. I have a decent opinion of Solana. I like the L2s. I think they're a little redundant. Um, Uncertain what plays out with the L2s, Arbitrum and Optimism, because those are networks of networks, the Arbitrum orbits and the optimistic superchain. I mean, it's real. The story's mainnet going forward. It's all mainnet. It always was mainnet. That was always the story. Everything else is just useless. I mean, look at Cosmos was popular last year. the hub of hubs. That story changed as optimism came online and Arbitrum started ticking. Um, I don't know. I don't know what plays out with anything other than I don't know what plays out with anything other than mainnet, Arbitrum, Optimism, and Superchain and Orbits. So there's a whole network of networks there, network of networks there, and Solana. Anything else? I have some hopes for Cosmos. I've retained my exposure there, but everything else is useless. Everyone's talking about this Monad recently. With fuck yeah, okay, Celestia. All right, what? So what? There was some other popular ones that launched last year, Galaxy or Gen. I don't know. Look, nobody knows the name of it anymore. It's all dead and dust. You're not. Nobody's moving their money off mainnet. Nobody trusts anything. That's so. Once you get trust, that's where money sticks. That's it. So, ladies and gentlemen, I hope that helps. Monday, December 1st, 12:36 p.m. Thank you all for joining me today. I'll have a stream towards the end of the week, and we'll see how four more candles close on a Friday. Maybe I'll do a Sunday stream so we get a weekly candle body close, and that gives us more definitive perspective on the week. But until then, stay rational. There's five businesses in crypto. There's four rules. And most of what you see and hear out there, ladies and gentlemen, is noise. You are not investing in anything but yourself, anything in your but your mindset. That's the ultimate investment. So I will see you guys and gals later this week. 242 people made it to the end of the stream and are now that much more rational because of it. Thank you all. See you then. Peace.